What's up everybody, Nate here, and everywhere you look right now you will see stories about how inflation has finally started to come down in our economy. Even the Federal Reserve is saying that we are now in disinflationary times and the deflation process has begun. But not everybody shares the same opinion. A recent study from some small businesses, CEOs, and investors on Wall Street show that they believe that inflation has not peaked yet in the United States or across the world, and the reason being is because of inventory. We obviously had a ton of supply problems over the last couple of years, and right now they are bleeding into a glut of inventory for a lot of businesses. Now, you're probably thinking a glut of inventory means that prices are actually going to come down, and in the short term, prices might actually decrease for a lot of goods and services, as a lot of these businesses just try to get rid of all of their extra inventory. It costs money for businesses to hold a lot of stuff on their shelves, so they want to start getting rid of all of it, but that is not the major concern here. The major concern is storing it. Cost for shipping containers and holding inventories in shipping yards right now is going way up because all of these freight companies just don't have enough space to hold all of this extra inventory from companies. It is a finite resource, the land that they use and the water and the space that they have to hold all of these shipping containers, well, they just don't have enough. So they are charging businesses an extra fee because of the lack of resources. So what we're starting to see is all of these companies actually passing those new costs onto the consumer. And when you have all of these additional costs on top of the products you already pay for, that means you have inflation. What this has everything to do with is demand. So companies over the last couple of years have had a really tough time actually getting a hold of things, getting things made, and then shipping those things to the consumer because of the pandemic. Economic lockdowns and just simply not having enough resources to produce enough goods to meet demand meant that prices skyrocketed all throughout the United States. This was part of the reason why inflation went up so quickly. We had a supply and demand problem, but today businesses are still trying to figure out what exactly the demand is going to be, and the fact is most of them have over anticipated that demand. Businesses sort of assumed that inflation and a lot of our supply chain problems were going to be in a much different place than where they are right now. So they overstocked a lot of their inventory and they created way too many goods and services. So now they just don't have a place for it on their shelves. They can't just send all of this inventory to businesses or their stores because they don't have a place to put it. Without a place to put it, all of this extra inventory is now just sitting in freight yards. It's literally sitting in shipping containers and on freight ships just waiting to hit the shelves. So when those products finally do hit the shelves, the prices for those products are probably going to go way up because companies had to pay a really high fee just to store them there. So two major thoughts that you're probably thinking right now. For one, why don't companies just create their own storage units so that way they don't have to pay these fees to the shipping companies? Well, that would make sense in the short term, but these storage facilities don't make a lot of sense in the long term because they are massive warehouses that cost hundreds of millions of dollars to build, and we don't know what demand is going to be in the future. So if businesses shell out hundreds of millions of dollars just to create these facilities and then not need them in the future, now they're hundreds of millions of dollars in the hole with a building that they can do nothing with. Furthermore, all of the storage facilities that companies have right now are pretty full. They're full to the max, and now they're using the cargo ships and the shipping containers as a means of kind of an overflow. The second thought is, well, if overproduction is causing the inflation right now, then why don't businesses just make less stuff? And this is a really difficult question to answer, and it's something that businesses have been trying to figure out for years, not even just related to the pandemic. Businesses want to have enough supply on their shelves in order to meet demand, but they don't want too many supplies because that can mean big discounts while they try to get rid of stuff. If they don't make enough things, then they're not meeting demand, and there's a potential that customers could go to a different product because this company doesn't make enough. There's also the situation where the company is not making enough in profits now to continue to expand its business and to meet demand because it simply isn't making enough products for people to buy. So what you want to have is an equilibrium in the market. Companies want to know the exact amount of things that they need to produce in order for people to buy them. And usually companies are pretty good with this. They're able to run studies and they're able to see how much extra inventory they get rid of or have to sell at a discount. Everything, and I mean everything, got thrown off because of the pandemic-related supply chain problems. Businesses no longer knew what consumer demand was going to be because a large portion of our economy was out of work for a long time, so they didn't have an income, and businesses then had all of these products still on the shelves that they needed to sell, and they were trying to figure out, well, should we create more? Should we wait? And ultimately, they decided to wait to create things, and that's why we had big scarcity problems with a lot of products. Eventually, companies kind of figured things out, and we were making enough, but then everything got thrown off again because of all of the pandemic-related stimulus measures, unemployment, and the fact that Americans were getting raises in response to inflation. All of a sudden, now you had people making a lot of stuff. So businesses were trying to meet the demand, and they were hiring people and building factories and creating all of these products all at once. But then inflation got really, really bad. And today, consumer spending just is not where it needs to be. So now companies have a glut in inventory, i.e., they have way too much stuff. And the fact is, these companies have stopped making so much stuff, right? It's not like right this second today, they're making way too much. No, all of these orders that were made that are now sitting in your shipping yards were made months ago. So businesses have to anticipate all of this demand way off in the future, and sometimes they get it wrong. And today they now have to make a decision on what they're going to do with their future inventory, right? Because if consumer spending continues to go down, then they're going to make way less products, and that could help inflation in general because now you have people spending less, but you also have fewer products on the shelves. They just don't know exactly what demand is going to be for their products, so they want to play it safe and have a little bit of over inventory because they don't want to run into the scarcity problems that we saw in 2020 and in 2021. They'd rather have a little bit more. And companies want to be very careful with their inventory because we don't know what is going to happen next with our global economy and what is going to happen next with shipping around the world. If we do see more global instability throughout the world, if we do have more virus-related lockdowns in countries like China, then that means these companies are forced to then not make as many things. That is going to affect inflation as well. So there's a lot of fear there from companies that if something goes wrong in the world, then they're not going to have the products in order to meet demand, and then you have something called stagflation. Inflation is going up, meanwhile your economy and all of your goods and resources are going down. What this means at the end of the day is that inflation and prices in the United States for your average goods and services might ultimately go up in the future because companies are passing on these new costs to the consumer. Once businesses know exactly the direction that consumer spending is going to be heading in, then they can pivot and either make more stuff or less stuff. But until they know exactly, then they're not going to take the chance on making too much or not enough right now. So they're trying to be as careful as they can with their inventory because they don't want to lose a whole bunch of money right now either. Because of the economic climate as it is, these companies are already losing a ton of money in a lot of different areas, so they don't want to lose more money by now having to give everything away via sales. Federal Reserve is going to continue to put pressure on consumer and business demand by raising its interest rates because it's a lot harder for people to take out a mortgage or just spend money in general. But that's not really going to help the inflation issue if you have businesses continuing to just raise prices because they have all of these extra fees that they're taking on for holding products in shipping yards. That just means it's going to be hard for consumers to spend money, and it's going to get even harder because businesses are still raising prices. So while inflation might be generally coming down in our economy, certain things might continue to go up in price. And you got to remember, inflation is still highly elevated. Like even if it comes in at around 6 or 7% on the next consumer price index report, that is still way higher than what we're used to seeing. So that could mean inflation stays elevated for longer, which means more rate hikes from the Fed, which means for you, it's going to be a whole lot harder for you to spend your money, and that's something that you need to prepare for. And until we have an equilibrium in the market where supply meets demand, we're going to have these inflation problems. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got got another one ready for you right here, so be sure to check that out before you go. That is it from me, everybody. Be kind out there, and I'll see you all in the next one.